Gopal Balachandran, he's CFO and CRO with ICICI Lombard. Gopal, good morning. Thank you for joining us. Now, for any general insurance company, auto has been a very large part of the total business. Auto sales are slowing down. Is that going to have an impact on your business? I'm going to start with the very basic question first.
So I think if you look at the general insurance sector, I think this is one sector where over the last so many years, we have continued to see the market exhibiting a growth of 17% in the last 17-year period. And there have been various segments of the businesses that have contributed to this growth for the market. And from an ICICI Lombard perspective, what we have tried to do is to kind of generate growth across segments, be it motor, be it health, be it the commercial lines. And at this point of time, we are a little cautious insofar as, let's say, some of the government-led businesses are concerned. But to talk specifically about motor, I think this is a segment where we have kind of also seen a spate of regulatory changes that have happened very recently. And some of these initiatives will actually kind of drive the growth even as we kind of look forward in the future. Now, if you were to look at today, on an average, almost half the vehicles that ply on the road is without an insurance. And with this Supreme Court order of making it mandatory for every new private car and a new two-wheeler to have an insurance, this significantly brings in a large part of the vehicles which was presently not insured under the ambit of insurance. So in that sense, it clearly opens up an opportunity of growth insofar as the sector is concerned. And within that, ICICI Lombard has been clearly kind of demonstrating growth from the motor business. And what we essentially do from specific to on the motor side is significantly risk select the portfolio. And the portfolio mix could be a mix of private car, two-wheelers or commercial vehicles. And at varied points of time in terms of how the market opportunity presents, we have been looking at writing segments of businesses that will drive the growth for us.
Right. Give us your own sense, how are you looking at 2019? Do you expect strong growth to continue in the new year? New motor insurance norms have aided cash flow. Do you expect cash flows to improve into FY20?
So again, if you look at, I think we always look at this business not just over a one-year period, because essentially this is a business which has to be looked at over varied underwriting cycles. Now, before I kind of specifically talk about how do we look at, let's say, FY19 specifically, if you were to look at what we have done as a company over the last, let's say, 10 years, the reason why I pick over a 10-year period is essentially this has been the last 10 years since the time the market was deregulated from pricing. In that period, if you were to see, our CAGR growth has been at about 14%. And while that has been the growth in revenues, but if you were to look at our continued focus on profitable growth, has translated into a profit growth of almost 23.7% CAGR over the similar period. Whereas if you were to look at in terms of the policy count over this same 10-year period, has actually kind of increased from 3.5 million policies way back in 2008 to almost 23.5 million policies at the end of 2018. So I think we look at this again from a long-term perspective. And even the current year, if you were to look at, I think the current year is looking quite robust for us. And as I said, the market has demonstrated a growth of 17% CAGR over the last 17 years. And our clear belief is, given the level of penetration that we see in this sector, we clearly see a medium to long-term growth continuing to sustain in the range of 15 to 20% for the market. And within that, the stated objective of ICICI Lombard is to try and generate a delta of 1 to 2% over the market growth.
Do you think penetration in the motor TP segment would rise as customers will take that 3-year third-party insurance as well?
So again, if you look at, I think that's a regulation. So what the new regulation does insofar as the mandatory third-party cover is concerned, there are 3 or 4 facets that come as a part of this new regulation. One is, I think, let's look at it from the point of view of, as I said, the first thing is, earlier only a relatively smaller cohort of vehicles were getting under the ambit of insurance. Today you have the whole pool of vehicles coming under the insurance net. So that itself kind of generates a lot of revenues insofar as the sector is concerned. And within that, as I said, I think ICICI Lombard is poised to capture the opportunity of growth which the new regulation presents. So that's one. Secondly, if you were to look at it more from a customer standpoint, what the regulator has also done is, along with the mandatory offering of the third-party insurance, they have also looked at making sure that the distribution cost that gets passed on to the intermediary, given that the cover is bound in for a longer period of time. So they have given a graded down level of distribution costs that will be paid insofar as intermediation is concerned. So this clearly in the past is something that we would have priced in as a part of our yearly offering. Given that now there is a graded down distribution cost that has been spelled out as a part of the new regulation, that will be a significant positive insofar as the customer's pricing is concerned. The second aspect is, I think again, if you were to look at it from the point of view of that's how the law of insurance works. You had a relatively smaller cohort of vehicles being insured, and within that you had incidences of claims being exhibited as a part of that. What you have today is the entire universe coming under the ambit of insurance. So clearly the expectation is you should logically get to see a reduction in the number of claims that one would expect to happen. And therefore again, once the insurance rates drop, so to that extent again it's a big positive insofar as the customer is concerned. Third, inherently this business, we have generally seen a lot of fraud happening as a result of again insurances not being there at 100%. Now with the changed regulation, it also kind of brings down the possibilities of fraudulent incidences, which would also be again a sector positive. And finally, again from an ICICI Lombard perspective, if you were to look at one of the strengths that we have had is to significantly leverage the use of our distribution, and at the same time making sure that this new regulation, which kind of also translates into a higher cash flows as well. So we are able to kind of leverage on that cash flows in our objective of driving a profitable growth for the future.
You know, lots of investors are saying that general insurance is in a bit of a sweet spot for 2019, led by changing regulations and improving competitive dynamics. What are your thoughts on the same? Can you explain the kind of growth that you foresee?
So I think as I said, I think we are kind of quite optimistic insofar as the sectoral growth for the future is concerned. As I said, we continue to see this market demonstrating growth in the range of 15 to 20%. The last 10 years, I would say, has been possibly one of the toughest times for the market, given that this was a period when we had seen price deregulation happening across segments, and we had also seen heightened levels of competition also being exhibited as a result of new players entering the sector as well. Having said that, I think the level of insurances which are still not bought in. Now, if you were to look at, there are enough and more studies that have been done in terms of how economies tends to grow in terms of the general insurance opportunity is concerned. There is a study that's done by Swiss Re, which is a international reinsurance major, and they have looked at how the growth of the GI sector tends to happen relative to the growth in the per capita of the country. And that again, if you were to see, I think we are in an extremely sweet spot at this point of time, wherein the per capita levels of the country is in that about $1,800 to $2,000 levels. And at this point of time, basis their study, when they have looked at various economies of progression in terms of their per capita levels, clearly the growth of the GI sector is likely to sustain over the medium to long term perspective in that range of 15 to 20%. So we clearly see this sector presenting enough and more opportunities for growth, and within that, I think from an perspective, we are well positioned, be it in terms of distribution, be it in terms of our product suite, and be it also in terms of our claim servicing capability. We are kind of building all the required pillars which would support the opportunity of growth that this sector presents to us.
I'm going to get closing comments and talk about crop insurance. Now, there is a bit of a disconnect as to what the government is trying to attempt versus what the reality is. Crop protection is something which is need of the hour, but when you have cases like farm loan waiver and when you have issues like where no discipline is maintained, do you think crop protection as a concept could be a problem?
So honestly, I think if you were to look at, I think what the government is trying to do in terms of their various initiatives, I think what they're doing is the right things to get a larger part of the ambit within the insurance fold, be it crop or even, as we know, the recently announced the Ayushman Bharat scheme, which also is in order to kind of get a larger ambit of people and assets under the ambit of insurance. So even the crop insurance scheme, which underwent a significant change in terms of its the contours of the scheme from 16-17, again the scheme dynamics, the way it has been constructed has been rightly constructed. And again, if you were to look at it from an ICICI Lombard perspective, we have been writing crop insurance as a business not just since 16-17. We did a pilot way back with World Bank in 2003-2004. On a commercial basis, we have been writing crop insurance as a segment since 2009. And at the end of the day, I think if you look at insurance, I think the key to writing any segment would be to make sure that you have the right price for the right risk, and at the same time have the right claim servicing capabilities, which will help sustain the growth potential of any of the segments. And given that there is competition that exists in the market, companies would take a call in terms of trying to be cautious at some points of time, given that if there are significant levels of price aggression being exhibited. And that is pretty much similar the approach that ICICI Lombard as a company has taken. I'm not necessarily talking only about crop as an area of opportunity. Every segment of the business, what we have looked at is to try and see wherever the market presents an opportunity, we have leveraged on the opportunity. Equally, when we have seen some of the segments, for example, in the recent past, we have seen aggression in pricing being exhibited by players. So at this point of time, we are maintaining a cautious approach in underwriting this particular segment. We will watch for, however, development in this space in terms of how the pricing is evolving. But more importantly, one of the other things positively which the government is trying to do, particularly in the crop insurance side, is again claim servicing is not an easy proposition. Increasingly, the government is looking at instituting various technological capabilities through which the claim servicing proposition can equally be well managed. And so the intent of the government in terms of instituting a scheme is absolutely in the right direction. I think now it will be for companies to take an appropriate path in terms of pricing the risk correctly and also kind of leveraging on the capability that the government is instituting insofar as claim servicing is concerned.
Okay, Gopal, appreciate your time. Have a wonderful 2019 and thank you for joining us.